Good morning, everyone. It is March 11th, 6 a.m., half an hour before the market is going to open. Friday, we had a down day. We had almost to the EMA 8. So we have some negative momentum carrying us through the weekend. And we want to see how that changed throughout the weekend. Is it going to continue this morning, or uh, did it reverse over the weekend? And if no matter what, is that momentum, does it have potential to shift or continue as we go throughout this session? So we're going to look at our futures. We're going to look at things like earnings, economic reports, to see if we can get a picture or an idea of how this week might open up and how it might flow throughout the week. So first off, we have our futures not open yet. So we've got down. We are down. NASDAQ about 65 basis points, S&P about 50 basis points, and the Dow also about 50 basis points. So significant. We are starting the day significantly down. It means that we are unlikely to have a green day today. So this is the wrong ticker, SPY. If we look at what we did last week or last Friday, we made a new high, but then we traded all the way back down to the EMA 8. What we're going to expect today is that we are down, and it looks like we are down maybe at the EMA 8, and it's going to be difficult for us to close back up above the close of Friday. So most likely we're going to end up somewhere between the EMA 20 and the EMA 8 today. And that means most likely sometime this week we will retest this trend line. So let's take a look at the rest of our indices before we start taking a look at how the week might go. Let's look at QQQ. QQQ had a engulfing candle. So the high is above the Thursday's high and the low is below Thursday's low. We ended below the EMA 8, above the EMA 20, and it looks like we're going to open right at that EMA 20. So if this breaks and it goes below the EMA 20 and closes below it, that's going to be the first time on the QQQ we've seen that break of trend right here. So actually, no, right here. We broke the EMA 20 right here as well, but we went back up. So if we break that EMA 20 or this trend line, we're not going to get too excited quite yet, because sometimes these are not exact. They're always regions. So if we break below, we want to see continuation, because it could just bounce right back. If we look at Dow Jones is an even weaker position. It closed just barely above the EMA 20 on Friday. We do have this hammer candle right here, and it looks like we're opening below that EMA 20. So we're at a danger zone right now, and we want to see how this plays out. The seasonal pattern, I guess we would call it, I guess it's more of a weekly pattern, is on most weeks in the S&P 500 or in the indices. Since the indices are normally pointed upwards, we're moving up more often than we're moving down. The pattern tends to be to trade down on Monday, but sometime during the day, bounce and flip around, and then trade higher throughout the week. So the most bearish day is Monday, and the most bullish day tends to be Friday. And we tend to have a bounce sometime on Monday. So if that pattern holds on the S&P 500, what that'll mean is that we'll have the limited downside, and then we'll start bouncing upwards. And then we'll want to see tomorrow, Tuesday, continuation upwards if we're going to keep this uptrend intact. We'll just have to see if that happens. Right now we're at we closed at 511.72. We're opening at 510. Last week we talked about important levels in the S&P 500, which was if we broke below 512, then we would test 508 and a half. And we ended up right at 512. And then now over the weekend or pre-market, we are well below 512. We could trade back up above 512, but right now the more likely direction is down towards 508. If we break 508, then it looks like about 504. Let's get this line going right here, or 505. Yeah, 505 is a strong level. So if we break 508, then we're looking at 505. Let's get this purple. And then do we keep on going down from there? Well, if we go down from there, that's probably pretty bad news for the S&P 500. The EMA 20 is 504.97, so basically 505. 505 is going to be a very important level to watch. So let's see what's on our economic calendar. That refresh, I guess. CPI tomorrow, that's going to be extremely important. So we're not going to expect huge directional movement today because fund managers will definitely want to see the CPI report, especially year on year. And year on year, X food and energy is what they tell us the Fed is more interested in, but what impacts the consumer is obviously food and energy the most. So you want to look at both from the government's perspective, X food and energy, or Fed's perspective, and then from the consumer's perspective. We're going to want to look at both of these. And then we have a petroleum status report that will be telling mostly for the energy sector, which is starting to move upwards. It broke this high right here. It is right at this peak right here. So if we get an okay or strong petroleum report, this could keep on moving upwards. So that will be specific to the energy sector. And then we've got jobless claims, PPI. This is all retail sales. This will be important on Thursday as well. So we're not going to expect a huge directional movement today. That makes what I said a little bit earlier about the seasonality on Mondays a little bit more relevant. So if we start moving downwards and it starts looking like we're getting directional, I would expect the 505 level to hold. I don't expect that without the CPI news, I don't expect that we'll break that level. So 505 will be important because if we actually do break that level before the CPI report, then that's going to be pretty bearish. And I would think that that would be a signal, a very strong signal of change of trend. It wouldn't be confirmation of it. It would just be, oh my gosh, this is pretty likely if we break that 505 level today. So if we trade downwards and we trade downwards towards that 505 before midday, I would expect a bounce. And for us to really end up kind of near where we open, but obviously not all the way up where we closed on Friday. So that's the most likely kind of overall pattern for the day. So it's down and then back up, which defies what I normally say, which is 70% of the time we move towards the previous day close. So another way this could happen is if we moved up towards 512 and then came back down and then stopped at 508 and a half or 505 and then traded back up during the day and then ending up kind of sideways on the day. That is possible as well. Okay, let's take a look at our earnings. which should be pretty much over, but I don't want to make any assumptions. So this week, Oracle, Adobe, Colgate. Okay, so there's actually some pretty important companies reporting. So Dollar Tree, Dollar General, these are all very telling for the consumer and also for tech. So these are going to be important. So we will want to pay attention to earnings this week. So since we have some pretty significant companies reporting, we also don't want to get too directional today because it's unlikely any of these are going to report on, well, today. So we've got March 11th aftermarket, so that'll come in effect tomorrow. Then all the rest are 14, 13, 12, 14. So again, very unlikely to get directional today. We have the CPI is going to be the major report this week, and then some earnings that are fairly significant. And then we've got the Thursday reports. They all come out at the same time, so it doesn't really matter which one's more important. They all hit at the exact same time. The market's going to react to all of them all at once. So we have these three. That's going to be pretty important as well. So we want to be careful today. I wouldn't be making huge positional bets today or directional bets unless you have a very strong opinion or view of how that CPI report is going to affect the markets. Then today would be the perfect time to get into position because you don't expect a lot of price movement, or the price movements, at least we expect it to not really ultimately end very far from where we open. So we might get a lot of volatility, price volatility, but the overall day-to-day movement is most likely going to be limited. I just want to take a quick look at this weekly chart just to see how things are. Yeah, so we've been going up on this amazing streak weekly. We've had one pullback right here, kept on going. We had a sideways sort of pullback. It did pull back to the trend line, but we ended not too far down from the previous week right here. Then we continued, and then we have this very big doji candle right here. It went high in an all-time high, went low, touched this trend line, and then we ended up sideways from the previous week. So this is indicative of market topping, but we could just bounce. It is still possible that we could bounce. We're just seeing more and more forces piling on top of this trend. So it's going to be more and more difficult for this to keep on going upwards. It's like we have a really strong athlete and they're climbing, maybe like world class, the top mountain climber in the world, and they're climbing this mountain, and it's so easy for them. They just keep on going, keep on going. Then we add weight to their shoulders, we put another weight on their vest, we put some weights on their legs, and then we just keep on adding weights. Eventually, no matter how strong that athlete is, they're going to get tired, and enough weights on their shoulders is going to cause them to slip and fall. So we just keep on adding these pressures on this market. Eventually it's going to fail, and it just looks like we've put so much on it already that we're getting really close to the point of failure. The fact that we are not immediately coming back up after this Friday movement means, well, this EMA 8 failed on the SPY, but on the QQQ, we're opening at the EMA 20, so we're going to test that for sure today. And the Dow Jones, it already failed. The EMA 8 already failed. We're right at the EMA 20, and at the open, the EMA 20 already failed. So we're going to watch these very carefully. What we're seeing is very early signs of potential for a reverse, a change of trend. On the Dow Jones, we're looks like at least at the open, if we close anywhere below the EMA 20, we'll get that very first sign that, hey, we broke the trend. Now we need to see if that holds or we bounce from it. So we did break the trend right here, but we had a green day and then the day above after we went immediately above. Here we broke it same day we went above, and same with this one. So what we want to see is, does today end up looking like this and we bounce upwards, or does it struggle to get back above that EMA 20? Or because you see how these lines are converging, the EMA 8, EMA 20, EMA 50, they're converging. That means we're starting to chop sideways. And so do we keep on crossing that EMA 20 back and forth, back and forth, back and forth? That would be a period of consolidation. And after such a huge run up, that consolidation, normally we say consolidation gives enough of a pause for the trend to continue. But this trend has gone up so much already. On the S&P 500, we've gone up over 25%. So this consolidation, well, let's see on the Dow Jones. Let's apples to apples here. Yeah, 21.5%. So that's anything 20 or above is sufficient for us to say this movement upwards, instead of this consolidation, it may not lead to another upward movement. It could just fail and come back downwards. So we're at a critical point. We'll see if it happens. And then if it happens, the sort of good news for the Dow Jones is if that does happen, the pullback is the next level is the MA 50, and that's pretty close. That's not a huge pullback right there. That's only a 1.3% pullback. So, or I guess I should do it from the peak. That would be a 2.5% pullback. So that'd just be normal pullback on the Dow Jones. But if that bleeds into the S&P 500, for example, then that would be a much more significant pullback. That would give us the 5%er, 5.26%. So that would be one of the 5% pullbacks that we look for during the year. And that could potentially turn into a 10% correction. 10% brings us to over here. So it's somewhere in between the MA 90 and MA 200, which is really interesting because when we measured this in the weeks before, 10% always brought us to the MA 200. So there's been this separation that MA 200 has been moving up a lot more slowly than the all-time highs or the EMA 8 or the EMA 20. So we're getting this separation. So if we pull all the way back to the MA 200, that's definitely in correction territory. 10 to 15%, that would be a correction. So again, we're just going to watch very carefully today. I wouldn't be making big moves unless we had a strong opinion about the CPI. And today, for the most part, should be a wait and see, because that's what all major institutions are going to do. They might take tiny pot shots here and there. The ones that day trade will still be active. They'll probably be looking at very similar levels to the ones that we've drawn right here. Okay. So that's all I've got. This one, just be very careful. Watch these levels very carefully. Keep your powder dry, and we'll see how that CPI report comes in tomorrow. So have a wonderful trading session, and I'll see you in the aftermarket.